Hey, tradeologists, we're going to do our daily review today, and basically, it's a very simple process. As always, all we do is take a look at the numbers. We manage by the numbers. We take a look at our delta, our gamma, our theta, vega. Take a look at quick profit and loss for the day figures. We are in pretty good shape here, I think. We're getting close to expiration. We have about most of our trades are in the May options, so we've got about 11 days left on that. What we're going to do is take a quick look at our deltas. We're 45 deltas long. We're gamma's at minus 155, which is pretty normal the closer we get to expiration. Our theta is a nice $77 at this point, and our vega's at 1130. So we're looking pretty good here. We're going to keep an eye on that gamma because gamma and theta go together. Obviously, what we want to do is we want to capture as much theta as possible. Really, these trades are theta positive trades. I mean, if you want to kind of get more information on theta positive trades, that's how we make our money. We collect on average that $76 every single day going forward here. Now we've got a nice profit open, but we're still early. This is the crunch time for these trades. 11 days before expiration. This week our profits are just going to explode. We've got $330 open on the profit figure. We've got $174 just today. If we go over to our Analyze tab here, we can see that our white line is our current profit and loss position. We're not quite on center, but we're still looking pretty good here. I think that we've got a little bit of room to move on the upside, and I'll show you in the VIX just a second. But all we do is take a look at this picture. We take a look at our monitor tab and take a look and see exactly where we are today. All of our numbers look good. Everything is positive. We're starting to get into a really profitable position here. Remember, this white line here is our current profit and loss, and that will continue to move up the closer we get to expiration. We've only got 11 days left, and this last week here before we get into expiration week is going to be absolutely critical. We should be up around here just over the $1,000 level before Friday. We're going to continue to monitor this trade, and hopefully we'll get an opportunity here if we start to get towards one of our break-even points to add to our position, and especially during the last week before the week of expiration. That's a great time to put on some trades because we'll just crush the theta on that. So what we want to do is just keep an eye on this. Take a look at our picture. Our picture looks really, really good. We got plenty of upside room. We got plenty of downside room. As we get closer to expiration date here, especially the expiration week, which is coming up after the end of this week. Today is May 5th on a Monday. This line is just going to start shooting right up here. I think we're going to be in absolutely excellent shape here. So we don't have to do any adjustments to our positions today. I think we're in really good shape. The reason for that, I think that we're really in good shape, is because of the VIX. Remember, the volatility index really gives us kind of a hint of where the market is going to go. When this goes up, remember, the market goes down, and when this goes down, the market goes up. It acts as a contrary indicator. It indicates fear in the market. You can see we had these two peaks back here in January 22nd and right around March 17th. We had these two huge up days on the VIX, which meant a crush, huge down days in the markets. And since then, we've traded down. We had a bit of a trading range in here between 22 and 25, which was very, very nice. That was last month. That was a great trade last month. We did very, very nicely in there. We've since broken down below the 22 level, which was the prior support. And now we're looking at, and that was broken down. Now it's probably going to act as resistance at this point. We've got support down here at 1750. So we're probably going to be trading just in this range here. I doubt very much at this point we're going to go below 17. I think probably we're going to be in this range, which will be absolutely perfect for our position, because if the market goes up or down, we're going to be in pretty sweet profit territory up here. Remember, this is our expiration line, the green line. Eventually this white line will move up to meet this green line, and that will be exactly what our profit is going to be for the month. Our maximum profit is going to be anywhere from $1,850 to probably around $1,100-$1,200 for the month. And remember, that's only like one or two contracts. Each one of these positions only has one or two contracts on it. So our open profit is take a look at our real figures. Our three is $334 on one or two contracts on each one of these positions. If we had 10 contracts, we'd be up about $3,000 right now. So, there's plenty of profit potential. This is our demonstration account. I don't want you guys to think that, you have to trade in large lots here to make a lot of money, because, if you're interested, if you're interested in doing these types of positions, you only have to put up maybe a couple $1,000s in margin in order to make, $1,000 a month. When this happened, and this is not part of the daily review, I just want to give you an idea that when the prices do move against our break-even points, and they did this past month, that gives us an opportunity, and I really mean opportunity, to adjust our positions and add to our positions. That's why capital allocation is so important. We don't put all our money into these trades at the beginning of the month. We let them run and then take advantage of the opportunities when the prices do run up against our break-even points, so we can add to the position. In the beginning of the month, we had maybe $1,000 profit potential on these positions at the beginning. Now we're up to almost $2,000 because we had the opportunity to adjust our positions. And they really are, when the prices move against us, they are opportunities. I really mean that. They're opportunities to add to your position. And now you can see that, in fact, we've almost doubled our profit potential for the month. We've added an additional $2,000 in margin. We started out with $1,600 in margin, and we're almost up to $2,000 in profit potential. So that's it for the daily review. We're doing very well. The closer we get to expiration, the status should get up to around $200 a day. And that's only like with one contract on each one of these positions. If you were doing 10 contracts, your profit would be up to close to maybe $1,800 a day or $2,000 a day. So the profit potential is definitely there in this kind of business. Once you learn how to manage your position based on the numbers, you have a good profit picture here. It's only a matter of size as far as how much money you want to make and how much risk you actually want to take. As always, trade with confidence and have a great day.